Morning traders, welcome to the Traders Lab. I'm your host Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Morning traders, welcome to the Traders Lab. I'm your host Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Well, thanks everybody. Hope we're doing okay. One moment. Just so you know, I'm back from Costa Rica. I'm now in snowy Chicago. And due to the technical issues I had with my streaming computer, we've had to kind of rewire things temporarily here to my trading computer, which is not really suitable for this. So we're going to try to get by until we can kind of get things a little better tuned up. But appreciate your patience, and I want to thank all of you for your patience while I was streaming with a broken laptop. Uh, and that's being kind for the last couple months in Costa Rica. So we'll do our best. And if you're in YouTube, thanks so much for being patient. I was sorry I wasn't able to interact with you. You should be able to post if you have any questions, and I'll do my best to keep an eye on things. But things also still a little funky over here until we can get it straightened out. So good morning, everybody. Thanks again for visiting TraderLab. This stream's about integrating Bookmap OrderFlow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades. These trades are available to all of you in the Bookmap Discord TraderLab community, as well as the TraderLab community itself, which is a group of like-minded traders who come together to leverage their collective experience. This is about the business of trading, understanding what the real business of trading is, not the fantasy, understanding the typical obstacles we face as developing traders, and it doesn't matter how long you've been trading or where you've come from or what you've done. We're all developing traders. I'm doing this going on 47 years, both professionally and otherwise, and I always look at it every day as something new, and not only is the market new, but how I experience the market and how I have to manage my psychological weaknesses that have been with me since day one. So it isn't so much when it comes to psychology of trying to change, it's the beginning to understand it. And most of us think it's willpower, and I'm going to suggest it has nothing to do with what your willpower it is. It has to do with how you understand what it's about, where it comes from, and even how to manage it. But you certainly can't stop it. The idea of learning to trade, which I know most of us as developing traders put all of our energy in, is not really where the problem is going to be. I believe if anyone who comes to TraderLab does the work, takes advantage of the other leverage that other traders, the data mining, the processes that are shared, anyone who does the work, I believe, and has some capacity for process and discipline, can learn how to trade. Then actually putting that trading to work in the environment of randomness is where our challenge is going to be, I believe, the bigger challenge. And if you've been trying to have discipline and, well, here's what I'm going to do and all that intentionality, and it goes out the window, there's some very specific reasons why that happens, and there's things you can do to address it. So that's the purpose of TraderLab. I hope you get something from this stream, and you're all invited to the TraderLab community. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room, but I'll do my best to get back to you with any questions on what I'm doing. And again, apologies for the technicals, both when I was in Costa Rica, but also today, because today's going to present some challenges also. So let's do the best we can. And Bookmap support, thanks for working on me and supporting this stream all through the Costa Rica technical challenges. Now let me see if I can get things going over here. This is Investor RT. This is my higher time frame trading software. It also exports to Bookmap Cloud Notes, which is very convenient. You'll see this. I'm on a different monitor than I usually am, so I'm not sure how this will look. This is one of my trading monitors, and it's rather large, and it doesn't necessarily lend itself to streaming, I don't think. So we'll see at the moment what we can do about this. This is Thursday and Friday's RTH. Now, you'll notice we have we had this wick, and this is after the we'll clean you out, and you notice how the market tends to go up and then goes down. One of the things I've observed over a lot of years is that when the market gets lopsided to one side, and it does this in all time frames, that it can very well wipe out the weak side. And notice what's under here: stops, stops. And this day was interesting also because this is a day where we had this wick, and I was looking, and this is kind of interesting because I was looking for the market to come down into the wick, trap shorts, and then go up. Well, didn't do it. This is life in the fast lane. Then up we went. But what happens then? We trap the other side, the longs. So even though we make a new all-time high, what do we know? The market is long. So look what happens here. I call this the Acapulco cliff dive. They wipe all the longs out. But what does that get in here? Shorts. So then what is the anticipation? Well, this is the RTH all-time high, and there's the ETH all-time highs up above, which typically, often, I have to be careful with saying typically, because there's no typical in trading, but there is something that happens often, let's say. And that is that all-time highs are not made in the ETH because the cash market wasn't open. So what we had here was the market is long. Buyers came in over here, going to the moon, right? Holding on, and then we get this. And wipe everybody out, and then the longs come in and buy it up. Now on Friday, this was an interesting day. Look what we do. This is called the value area. 70% of the volume from Thursday took place in here. And we set up something on Friday where was the anticipation was going to be a neutral, potentially a neutral day or overlapping day based on the context grid sheet I've shared in TraderLab. And what we did is we traded inside value area high, value area low. No precision, guys. And you'll notice inside day, and also this in market profile world is called a neutral day. That means both sides are active. Now there was another element in here, and these are briefly discussed in our travels in TraderLab. Excuse me. It's dry here all of a sudden versus the jungle humidity. Quite a contrast. And that is Friday, you're not going to get new long positions. You'll get evening up, right? Because of the perceived weekend risk, which is true. However, if you put a profile over these 2 days, it shows balance. And what balance is basically, the theoretical term was the Mexican standoff. No offense to any Mexicans. So what you have here is both sides active and basically a balanced profile. If you put the 2 days together, you'll see it's very Gaussian. Exhaust, there's nothing up here, there's nothing at the bottom, and most of the volume is in here. And this is the value area for these 2 days. So most of the volume over the 2 days took place between these two lines. So it's balanced. Now, if we go to a higher time frame, as you think of it, the whole thing is balanced, and 45 is balanced for the larger time frame in these 2 days. 67-ish is balance. So this says balance, and if you're in a bull market and and the higher time frame is long, and all you did was blow out the weak longs, what might that suggest? It suggests the possibility of drivers start your engines and continuation north. And that was the anticipation on Friday. I posted this over the weekend, neither here nor there, but you know, that's always what can happen. And then we come to today. Is everybody tracking so far? How we doing? These chats keep disappearing on me, guys. Sorry. It's very different doing this on a different computer. I am having some trouble here now. Hold on. Trying to get the chats back. Oh, happy Groundhog's Day. Yeah, thank you. You trade NQ, and recently I'm focusing on using options flow to my trading. My question is, shall I focus on Q and NDX, and also I got to focus on SPY to track the hedging? I don't use that process, and there's others who are better versed. You might want to check out. There's a few option hedging streams. One of my great associates here. Let me see if I can give you a link. In fact, can someone put options with Doug a link in there for this for that question in YouTube? By the way, my flight was delayed. I got in here about midnight last night, and then it was trying to get everything working here. JJ, I can't show my alerts, but they should be up there in the document section. Okay, let's get into this. Again, apologies. I'm still having some problems here with this. Yeah, I'm having trouble. So let's come back here and look at something. 45 was that high volume area that we talked about in the intermediate time frame that I just showed you. The ETH volume point of control, which is the last auction and is the high volume. The 45 is an intermediate time frame fair volume price. The ETH, which is the last auction, is the retail price. Let me see if I can show you a couple other things here. Not sure. Yesterday's low, I hope these levels are correct. I had to install all this software on a different computer. 55 as a naked volume point of control, and that's the ETH low. These are retail prices, and if the market goes down in the ETH and it checks a retail price, and these are like shopping, so if this is too low, and look, we did test under yesterday's low. Oh my goodness, we're going to zero. But what happens? We come back inside, and now we're at the next retail price. Whoop. Sorry. Can you guys see my monitor okay in Bookmap? This is the RTH open. This is the retail price from the ETH. Yesterday's value area low. This is very important. And then the highest volume price at 45. Is the monitor clear, Todd? Can you read the numbers here? And how we doing in YouTube, guys? Appreciate your patience here. I'm still having some trouble on my end here. Okay, great. All right, so RTH open. This is the last auction, overnight volume point of control, yesterday's value area low. So we're opening lower in range. Let me try to get this here. And I'm going to call this in value, but you could say it's out of value, but it's right on the edge. And this is where a little judgment comes in, because look at what we did on the downside. and we had a balanced day. So that means if we have a balanced day, that there's energy. Think of them almost like a triangle or a pennant. You know, you can kind of think of them in the sense of the compression of energy on both sides. So when you have balance in a bull market, you're near all-time highs, and basically we blew the longs out, right? Put the pieces together. What does that suggest? The market does what? The market goes up to go down. The market goes down to go up. If the weak longs are blown out and you're within hand grenade distance of all-time highs, we're in a bull market until it isn't, and we have a weak high and we have an ETH all-time high, which typically isn't left behind. If, as they say, you are going to take a wild guess, which way do you think that volume in that balance is going to go? For me, long. Unless not. Does that make sense? Are we doing okay? How we doing in YouTube, guys? We doing all right? Please give a like. Appreciate you visiting again. Are there other questions there? I'm going to try to catch up there. So this is RTH Open. Here it is. This is going to be called Developing Volume Point of Control. This is going to represent the new retail price. And this becomes very important. Now, what we're going to watch is absorption, interaction with passive sellers, liquidity. These are sweeps. And at the moment, I'm not showing stop and iceberg detector. I have to make adjustments to that because I'm on a different monitor here. So, and all this was last minute, unfortunately, getting all this working. So let's look. This is your retail price. Let's go back to the supermarket. Trading and shopping. What's too low, what's too high, and what's just right. And what happens in the supermarket, as you know, doesn't go on sale often. And then it goes back to a fair price. Everybody buys it. If the price gets too high, they don't buy it. And if the sellers want to sell their product, and here S&Ps or anything else, they're going to have to lower the price. The thing is, in an intraday developing time frame, this process takes place not like in your supermarket where the prices are stable. This takes place in different time frames as you think of it. Now, order flow is not time-based. In the sense of it's the time it takes for absorption, the other side, and the pricing in the time frame to become exhausted. So if I get too high and I find my sellers like here that absorb the buying and I run out of buyers, then my market can break and come back to an area that was previously a retail price. It's shopping. So let's say this price is too low and we find a price that's too high, wherever it is, and now we break down, then there's the possibilities of coming back to a new retail price or testing a previous one. And of course it could ignore everything, right? Part of the joy. So what do we know here? This is the RTH Open, just as an example. And I've got my sellers. Well, I've got Delta. Delta is the aggressor. Now, the thing with aggressors, they represent market orders. And what's a market order? Well, what makes up market orders? Initiators and sell stops. So we could see a sell stop as an aggressor because it shows in the delta, but it's not necessarily a initiator. It's really more an exit, a protective order. So when we see the sellers as represented by the delta, it doesn't necessarily mean those are shorts. I'm sure there can be some in there, but possibly when you get the move in the other direction, it was just stops, okay? Or shorts that got upside down, Thanks for playing. They get a coupon to the buffet. So what we know here is there's buyers. So if there's buyers here and I get above the sellers, which are here, that means, of course, I can go higher. Now, the yellow line's developing volume point of control. This is developing VWAP, developing mid, and we're starting to move away. That suggests potential directional move. And of course, potential's all you got. Here's a buy sweep. Now, two things can happen here. When you get a sweep, we're looking for a potential counter rotation, and we run into liquidity right here. Now, this sets up an aggressive entry, and again, these aren't trade recommendations. You have to vet these. How are we doing in TraderLab, by the way? I can't see the... Do we have any questions rolling here? I'm not getting anything here. All right, so this is a potential long entry. This is called an order flow entry. It's an aggressive entry. And part of this would have to do with this being above the high volume in the intermediate time frame, being above the ETH volume point of control. Also, we have, let me just look at some other levels up here, naked volume point of control. Statistically speaking, let me just find these statistics. About a 68% probability to get here, and there's over 90% probability to get to either ETH high or low. ETH low is somewhere in the subterranean area, so what's the probabilities? Once again, coming to probabilities, that is north. So first long here, aggressive order flow, not necessarily your thing, no biggie. Let's watch. Let's watch the behavior. This is another order flow experience. Right here, you break below it. Notice the difference here. Order flow trigger, potential long, aggressive. Order flow trigger, break low, suggests counter rotation. Don't know where to. Let's see. Resistance. Don't know. I haven't gotten even a look at this. This is support, and this is support right here. Let me show it to you. Now I always like to get down into micro to help you see market mechanics. This is how you can use the profile. Now you have to learn what it says, but the profile's not an indicator. Wouldn't we all like? What it is a representation of the auction, and what the auction is shopping. So if we know the sellers are here, and we blow them away. What do we know here? The buyers were there. The sellers were there. Blow them away. The volume looks like this. Initially it was, I'm not paying that. Yeah, but it's on sale. Too low. Retail. This is like your mini mart. I don't want to insult anybody, but if you think about what it says, the auction is really how the market works, because it's trying to figure out pricing. So it pauses, it checks the price if it doesn't like it, or if it's too low or too high. And this perception of pricing can change in real time, but we can understand what it says. We don't know what it means until a little hindsight. So when we have this going on, this is the retail price. High volume is suggested by these retail price, and you can go anywhere and you can see this process. So if I see it here, and this resets at RTH open, hold on, got to make sure. Right, okay. I switched everything, did a lot of switching over. I don't know if everything is set correctly, but I think it's pretty close. So if this was too high, and that's the retail price. This now, which was resistance, becomes support. So let's look at this. So if I'm reading the order flow and I don't have indicators, here's what I know. I know this is resistance and a sweep. I'm looking for this. I don't get it. It's like, oh, that's nice. Same thing up here. I don't get it. Up here, going to the moon, right? Break low. This is an order flow trigger. It's not necessarily a short unless you're using this for trade management in your plan. But in your plan, if you're in TraderLab, you're going for this initially because of the probabilities. What you don't know, like everybody else in this business, are we going to take the opening swing low out? Right? Good question, isn't it? Guess where the answer is? Down the chart. Not here. So this I call a variable high volume node. made them up. And what I found many years ago when I was working with market profile, that I'd started tracking when the high volume would change, because I thought, you know, shopping retail is pretty important. And if we came back to volume, what did that mean? So I just started seeing this kind of phenomena. And at the time, nobody was doing it. So I said, well, this is interesting. What does it all mean? The buyers were here. The sellers, remember, were there. Where is my support? Variable high volume node. What are we checking right there, you ask? We are checking the former retail price. It's like getting in the car, I'm not paying that, and driving back to the place where the prices were lower, and you come down, and is the price still too low, or is this price, which we are now leaving, too high? It's another form of support and resistance. Is this making some sense? I can move on from here if you don't want me to go over the minutia, but the minutia is the language of operating in multiple time frames. How we doing? How we doing there in YouTube? You guys doing all right? Thanks again. By the way, I can read the chat now since I'm no longer in Costa Rica. This is a TraderLab long. Now, let's talk about this. This is the opening swing low. Here's what you know. You know the buyers are here because of the absorption. You see the aggressive buying. This is just not another walk in the park. This is what's happening. You know, this is my support. Now, we have a structured trade in the TraderLab called VWAP to VPOC or mid to VPOC. This does not qualify, does it? So you can't take that trade. And you have the opening swing low. So there's the very good possibility to come under here and grab the inventory and then go higher. So for me, if I was taking this trade, I know this is support, and I'm going to look for it to come under here and cross over here for a long. Just telling you. Now, this is more aggressive to buy it here. You'd be buying it up here. But here's another way to enter this. If I already, right here, I see the rejection. And here's kind of a way, at least the way I try to organize process. Now, it's just the way I do it. I'm not saying there isn't a better way, but I built trading systems, and in the trading systems, the branch logic would be generated by the conditionals with a conditional statement. So it went something like this: if this, then that; if not, then what? If just grab the wrong computer. If this is too high, break, test. This is a short or a exit or whatever you want to call it. If this is too high, if this, then that. And then to take this out, take out the opening swing low. But if not, then what? Well, I test it again. This now is too high. I test the VWAP in the mid. I see my sellers again, but this is where my buyers were. Again, I don't know. When this shifts down, there's two possibilities. Break down, similar to this, break down, take the opening swing low, or not. So if not, then what? Then north. How do we get on? Well, if you're not buying this, then as soon as this shifts up, this is a long, your stop's under here, or this is a long, your stop's under there or under there, me under there, and then you're going for this. And there's more. I'm sorry with all the detail. Guys, is this good? Is this helping you? Is this useful? The whole idea was the long and where you could get long if you're using TraderLab structured trades that I've shared. You can develop other ways to do this. These are longs. Is everybody following? How are we doing in YouTube? I'm worried about YouTube. I hear chins hitting keyboards or heads hitting the monitor. It is useful. Great. Okay. And guys, again, YouTube, apologies for the last 2 months while I was in Costa Rica. You know, the idea of being a digital nomad. Well, they don't tell you what happens when you're in a country and you try to buy a new laptop that has to have, for me, my laptops are like a Ferrari. And there was like, no, sorry, we'll order you one. You'll get it in a month. It's like, and that's checking through the whole country. Pretty amazing to me. Okay, it's good. All right, thank you. All right, so this is the initial longs for all the reasons. This is a long, and then we're trying to go here. This has over 98% probability, and remember we're in a quote bull market. Next area would be here. You'll notice value area high. The market tends, the way it works is if we're going through the value area and we're in a quote bull market, we're over the high volume area and we had a balanced configuration from Thursday, Friday. That's like a coil as you guys think of them, coils or consolidations. You'll notice in coils, we used to call them coils. I don't know what they call them anymore, but basically it's a compression. And the thing with these compressions, they happen in all time frames. So intraday we get consolidations, it's all the same. So all time frames operate the same. So what I'm doing is sharing microstructure because it's the same behavior. When I'm down in this little structure, this is the same thing. Too high, too low, it's a consolidation. There's the volume, there's sellers up there, there's buyers down here, and whichever side is off sides, that energy is released. As you go up in time frame, it's the same process but more energy. That's why when you come out of swings, swing high, swing low, and let's just say it's been a big consolidation, you can get a substantial move out of those. And those can be very, can offer us a lot of opportunity and risk if you're on the wrong side. So, too low. This is another long in the TraderLab right here. Variable high volume node. I think the thing with the high volume nodes is it's something that is mechanical because it's visual. And if you keep track of them, if you think about what it is, now lines on a chart are just lines on a chart, and it's not mechanical in the sense of what will happen, but it gives you information. So these are not your moving average derivative oscillators, RSI, and all that kind of stuff, or envelopes. None of that. This is really language. So to learn how to do this, you're not using backwards looking curve fitted indicators, putting a bunch of them together and then having random inputs. This is very specific to what has to happen for you to have a location for a trade, not mechanically have a trade, have a location. So when you know where the locations are, you can anticipate the behavior, and then you have triggers or order flow phenomena that you can integrate into this, so then you know what you're looking for. What do we know here? Let's look what we had here. I can't draw on this. I'm going to try to fix some things here. I don't have all my tools. This is important right here. There. That's right here. I see my buyers. I have VPOC migration. So this says too low. New retail price. I test it. Buyers are here. Let's look at the microstructure. Break high. What's this? Support. Basically, the buyers that are here who bought go and buy again. This is my retail price. This is a micro reversion to here. Break high. I now have my, if you look at the structure here, can you see the white line across the chart, guys? Can you actually see that? Where it says 5450, can you see that? Yeah, okay. The 5450 is resistance. in the bottom of this. That's what set up our reversal. When I come back, I now have a sweep here. This is a sweep that suggests upside rotation. Resistance, similar to this, right? Buyers are here. The sellers get below the buyers right here. This is a micro short trigger. Break low. Sellers are here. These buyers were absorbed. Sellers are here. Buyers are here. So I have buyers here. That's absorption. I've got buyers there. I've got my sellers here. I got my buyers here. Why is it not going up? Because there's sellers here. Probably these guys. I say probably, I don't know. Sellers are here. Buyers are here. Sellers, buyers, sellers. Why do I know there's a seller there? Because it didn't go up. Buyers, buyers, no clue. But here's a clue. Buyers. VPOC migration. Buyers. Now there's two possibilities. Let's go into the possibilities. Break low, come here. Look at the opposite here. Break high. What about this one? Break low, break high. So this is support. So this was support when we came down to it. Didn't quite do it there. We came down to this one. It's support, break high, support, break high. Didn't quite get there, but that's support, break high, support, break high. This is now your support, VHVN. Watch. Now we have a buy sweep, suggests counter rotation, and we get a sell sweep, suggests up. Targeting, 98% probability. Now we have value area high, and you notice the resting liquidity at 75. Another target. Watch. Target. You could be targeting these in your travels. Now there's more, I think. Yeah. Yesterday's high. What's over yesterday's high? Stops. Do we want to go for yesterday's high? Now we do know, and I'm just giving you a ballpark number. You have to vet these for yourself, and these statistics are available in TraderLab. There's about an 87% probability to take out yesterday's high or low. You do notice, and you do remember, we took out yesterday's low in the ETH, and we're going north by northwest. If that's the case, which one would you put your bet on? Yesterday's low or yesterday's high? These, or ETH high or ETH low. If we're betting, if you will, on returning to yesterday's highest volume, the retail price, if we're betting that we're going to take out the ETH high, if you're betting that we're going to take out the value area high, and you're betting the 87% probability, is this a target you would move towards? What do you think? Yes? No? Maybe. Can you see how having a plan, and this is what the business is about, not what the market will do or where it'll do it. It's where the market might do it, understanding why it might do it, and then knowing, if you know locations and how to read a language, it'll help you get in alignment quicker with it. And the other thing is, this is not a business of playing a video game or making it up. When you're in TraderLab, you'll actually know the trades. You'll know where they might happen. You'll have vetted processes to help you get in alignment. And yeah, you're going to take stops, overhead, and cost of production. But when you develop confidence and statistics, you hear what I just said? Statistics. You're going to be able to manage the lunatic under the hood, Jekyll and Hyde. The story of Dr. Jekyll and Mr. Hyde. Now, Hyde is the emotional wiring. I'm uncertain. Is that a saber-toothed tiger? I'll see you later. The fear. Think about how fearful you are. I mean, we're all fearful. So, and why are we fearful? We're wired to be fearful. So you can't stop it. In other words, you cannot detach yourself from fear. You really have to learn about fear. And when you have metrics, you can now separate When all you have is fear or emotional states, that's all you got. And then it's the fear of being wrong. You're measuring yourself by P&L, which is not, in my opinion, shall we say, the path to the promised land. The Using P&L attaches you to individual outcomes when the outcome is random. So how can you attach yourself to something you have no control over? You need to be attached more to statistics because they're tangible. Tangible, shall we say, probabilities that you can touch versus emotions that you cannot touch, you can only experience. Which one do you think is going to guide you in this business versus when you're out there hunting and you got to be concerned about the apex predators? Your psychology or primal wiring can't differentiate, so it's always activated by uncertainty, you see. So that's the catch 22 in our business. So this is resistance. High probability, 87% to go here. Let me ask you, you getting short? Now, I'm not saying you can't. It's not my job. Me, not so much. By the way, I'm still not trading live. I can't until things get under control here, which they're not. Okay, VPOC migration. We gotta label this. You'll notice what's happening. Now, there's a couple things happening, of course. Mid and VWAP are separating and moving higher. Market is moving higher. Any counter rotations, I think this is the largest one, are being bought. Now, I'm going to show you something else right here. You might find this interesting. Now, there's no precision in trading, Wouldn't we like that? But let's talk about some of the things I know. If I break above this, this is an area of potential support. This. I break under it. This is now support. This is resistance here, right here. Resistance. Break low. I'm looking at this and the VWAP for potential continuation long. I break high. I'm above this, and now I'm just, what's going on here? If it comes here, this is a long for me, or even down here, no problemo. VPOC migration. Now, what's the possibility? If it breaks high, I can take a long. Do I have a place to get long? I don't have a place for a long here if it had given me some more structure, but it breaks away here. So unless you're willing, to pay up for it. But there is something else. This is where we found our sellers, right here. And nobody knows. I look at this and I go, oh, that's nice. Because right here, I don't have anything. I get liquidity comes in here. So that's the limit order book. And there's probably icebergs active here. I don't have my iceberg or stops on here. But maybe by tomorrow. Break low. This is resistance right here. Break low. Buyers are here, buyers are here, buyers are here. So this, no idea. Just there it is. Buyers were there. This is resistance. This is resistance. Buyers are here. This is support. I have nothing I can do here. Not me. I just wouldn't do anything over here. Resistance is here. There's the resistance. Break high. Now this subject to, well, let's not go there. This order flow trigger, break high. Now this is important because once you get outside of yesterday's range, and we are in a bull market, and we're getting outside of yesterday's high, we're breaking out, right? And we're looking for all-time highs. I don't know where we are, but that's where we're looking. This is interesting. So this is an order flow trigger. This is a long, potentially. This is a sweep. This sweep suggests counter rotation, and I'm running into liquidity. So what I have here is support. This can be looked at as support. This sweep is suggesting counter rotation, so I don't know where we are. Let's see. Oh, look at that. This is useful based on that breakdown. There's buyers. VPOC migration, what are the possibilities? If it's too high, I break low. If it's too low, I can come back and test what was too high. That's the nature of the beast. This is the IB high. There's over 90% probability we take this thing out. Past performance not indicative of future results. Who knows? Pull back. Now notice the change. This is support. Checked it too low. Found too high. Break low. Sellers again. Now look what happens here. I break down. This is support, but I'm under here. This is the retail price. If this is too high, this becomes resistance. I'm going to label it. Now, it doesn't mean you take trades off of here. The idea of this is that subject to your time frame, and there's some traders are going to be sitting long from the low of the day, sitting in the Barca Lounger, and other traders in TraderLab are going to be actually actively managing the trade. Some are actually going to take counter trend trades, which for me, this is all a matter of your own experience and your statistical probabilities. What I always suggest to developing traders, and I'm going to also, from the experience I have, that let me just say many developing traders don't understand FOMO. They're going to try to trade from both sides because they're focusing on P&L, not developing skill and proficiency. And I suspect in this business, proficiency is much more important than playing a video game and gambling. But everyone makes that choice. If you make a choice, this is just a little side note, if you make a choice, in spite of let's just say someone who's done a lot of trader education over the years, suggesting a path to consistency and potential sustainability in a career, but you're driven to do something else that is actually an impediment to your staying in the business, and you make the choice anyway, I'm going to ask you to ask yourself, what is in your mind? What are you thinking about when you make that specific choice? Because your consciousness is being steered by something that is unconscious. It is hide. So hide causes us to make choices based on our need to bring food back to the cave to survive the winter. You say, so you will make choices, but not what's in your best interest to build a career in this business. You make choices without being conscious of the consequences. So I'm sharing with you there are consequences, but you are not going to be conscious of why you do the things you do. Ask anyone who's been trading for any period of time about what the toughest part of trading is. Remember, I always say you come to TraderLab, I believe anyone who does the work can learn how to trade. But the things that are going to take you out of the business really are you. You just don't know yourself in this environment. This is an environment of 100% randomness 100% of the time. We have no control over what happens when we put a trade on. We only control the moment up to the moment we push the mouse, and then the trade does its thing. And either it's random. It's part of a random distribution of outcomes in a random environment. It's gaming. So casinos, play the cards, they deal the hand, but they don't change it. And they're not focused on how much money they make. They're focused on playing the game because the game has an edge over random distribution or interactions with the randomness of the cards coming out of the deck and the random play of the gamblers. They have no control there, do they? we're in the same business, and our, what I've shared are structured trades, and you can also create your own. But you need to know they have a statistical edge. The random winning trades, just so you know, which keeps us coming back to play this random winning game. All gamblers have winning hands. All traders have winning trades. If you don't have an edge, you're going to have as close to as a guarantee as anyone can give you that you're going to lose money with the trade that has random winners. If you knew that, would you keep trading it? Think about it. So, too high. Now, guys, did we take the IB out over here? Can someone confirm that? I can't tell. 9:30 Central Time is the first hour's high or low. So that's here. Did we take it out by one tick or something? We took it. Was it a one tick? Is this one tick over here? Yeah, we did, huh? Okay, so this is a one tick of the IB. This can be consequential for a counter rotation. Let's see what it does. Yeah. So this is the one tick IB, and this can cause a substantial counter rotation or more. Now we're still in a bull market, right? So I don't think getting short would be on the plan, but that's me again. What do I know? I now here's another piece. I'm going to show you another, and this is a bit advanced. This is a counter trend short. Let me explain it to you. First of all, this is resistance. There's your sweep. This says counter rotation. Okay, you come down here, who knows? This might be a continuation long. That's up to you. You got to clear this. This is the IB. You have over 90% probability. You have your helmet on and going to the moon. You get the one tick. The one tick is a warning Will Robinson moment. You've heard of Will Robinson, Lost in Space. And this is support. So you're under here, resistance, support, absorption. The buyers that are here are there. Oh, thank you. Resistance. Sellers are here. Break low. Trouble. Now, where's resistance now? See the white line? It's right there. This is a counter trend short or an exit, or you're just taking a nap and your stop is way down below. This is subject again to time frame. So right here we hit liquidity. I'm under this. Now the next trade that comes up is a reversion trade. Now reversion is outside in trading. If we accept at the moment that the trend is up, we only want longs unless you're a counter trend trader. Me, not so much. I'm going for the extended upside. I prefer, and especially for the stream and for TraderLab developing traders, to align with the primary side. When I trade counter trend, and I can tell you, well, I trade both sides, but I only want to focus on the dominant side because years ago, many years ago, I used to, well, I always trade, not always, but let's just say, I found over a lot of years that the dollars were made with the dominant side. And years ago, when I was managing funds, I was a position trader, trend follower. So what is the old saying? The trend is your friend. Does that ever go away? So if there's a dominant side and the rotations are larger to the upside versus the downside overall, which side gives you a better bang for your buck or better risk reward? It's going to be the dominant side. So if you're a developing trader, when you're developing, reversals are exits from the dominant side, not shorts. Here's why. Let's assume you take this as a counter trend trade. Fine. It is. But where's the trend? Up. What's the smarter move? Maybe. Isn't it long continuation trades versus this? Same risk? Possibly. So where are you going to put your risk on? Me? I want to go north. That's all I can tell you. This is interesting. Look at this. Come back, sweep, resistance. We know that. Liquidity comes back in. We have sweeps. Sweep says potential counter rotation. Resistance. Sweep. Having trouble here. Liquidity coming down. You can kind of see the order book thickening. Let's look a little further. VPOC migration going north. And what happens up here? Look at where the white line is. We have a new retail price. And what do we need the market to do? We need the market to do this. Higher. To do this. Higher. To do this. Higher. To do lower. What does that say in the language of the market? Same thing it said over here. Maybe too high. Maybe too high. Let's see what it does. Okay, nothing to do here. Resistance there. Break low. Nothing. Now I have this. Let me show you just a little dynamic here. Notice this. Let's look at this. Look at this. Here's how I use this. Resistance. I'm not paying that. Leave. But this is too low. This is reversion. And I have nothing to lean on here. Well, I do have something to lean on, but this would be harder. Let me show you this. When you get rotations like this, and I'm going to come back to what I want to show you over here. And we come outside, there's a couple ways to do this. If the trend is up, what happens when we get too high? Where are the stops? Well, they're under the swings, you know. Retail traders are going to tuck their stops up. Well, we know there's stops there. So as it comes down, here's my sweep. This says look for an upside rotation. Now here, this is another way to use the profile. This is called reversion. So when you come outside, the idea is in the developing daily time frame, there's an outside edge. And this is where the volume starts drying up. Think of it this way. In the shopping experience in your store, there's a retail price. Well, graphics. And that high volume or retail price is sitting right here. As the market's coming down, and we're coming down on sell stops and whatever else, it's going to go down to wherever. As it comes down, if you look at the volume out here, here's 117, 153, 138, 1,000, 600, 200. This is an outside edge. Now the hard part, of course, is where's the outside. This is part of the joy. And yesterday's range. So we're testing inside yesterday's range. Now this is very important. If we're testing inside yesterday's range, then we can test, and if we come back out again, we're looking for continuation. But where might you do that? Well, when we come under here, there's buyers waiting for it here. There's absorption. There's absorption. But I have this sweep. This sweep says the potential to go higher. So that's one area. If you bought it here, right here is a double bottom. Now, a lot of traders aren't going to pay attention to this. I pay attention. So right here, I'm looking for a long, just telling you. And I see the sweep, I'm looking for the long. I see a double bottom here. Now, if I'm myopic and I buy it here, I'm going to take a stop. Look what happens over here. A triple bottom. Is that a strong or a weak structure? These are weak. That's a weak structure. This is a weak structure. I get selling below it. I'm coming to an outside edge. When you're trading mean reversion, and I always joke in TraderLab, it's mean. And it's mean because you're trying to catch an outside edge. And when I say catch, it's like catching an anvil. You may get long here and take a stop. It comes right down here, and there's my absorption, which I don't know. Let's look at what I have. This was my support, which I broke. This is resistance. And this was weak, but I was asleep. I didn't notice it. This is resistance. It's right here. Okay? Absorption is here, outside edge. No clue. Right here is where my sellers were. Right there. Break high. I have my buyers are above my sellers, and this, I can perceive this as resistance now. I break above it. I can take a long in here. My stop's got to be under here or around here. Well, you see the buyers took over. It could be under here too. So long to there for a scale. Remember, on sale, back to retail. Oh, it's on sale. Retail. But if the trend is up, then where am I trying to go? Where's my next resistance? Here. Resistance. Resistance. Move high. Resistance. Same place. Sweep. What was this? Isn't this where it changed? There's my buyers. And this is my sellers right here. So I have sellers, 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 sellers. Buyers overtake these sellers. This is a support area. I can use that. I have buyers here. Break high. That's a trigger. I can buy this here. My stop will go under here because there are buyers here. In other words, I wouldn't put my stop here because I can buy it here. It can pick this, come up. So if I'm leaning on this structure, I always personally get behind. And this is a better place because look at the aggression. So I had my sellers there, buyers there, sellers were absorbed here. So I know under here I got buyers there and I got buyers here. I got liquidity over here. I personally, and I'm not recommending this, do not put my stop there. I'm over yesterday's high. This could easily check in again and go. Then where's my resistance? It's here. Let's see, where are we? There we are. Graphics are having a hard time with this here. So this is my support. You'll notice there was a sweep. I hit the liquidity. This is the liquidity that was resistance all this time. IB, break high. We also have another trade in TraderLab called the IB continuation trade. I don't see a structure for it yet. It would be, there's a few ways this one would work. This is the outside edge. Low volume node. This is the same trade I was showing you down out here. Same, except different, same structure, less volume or less range from low to high. So this trade would be in here as a structured trade, and it could also just come to the low volume, which is out in here. So this trade would be in this area. Now we are seeing our buyers here. So this is not a structured trade unless you can, just want to use the order flow, and that's a different skill set. And still at the moment going north. Let me see if I got targets up here. All-time high, RTH, it's on the hip parade. We have stops over this high, stops over the all-time high, and that was the ETH all-time high. Let's just see what this looks like in IRT. If you have questions, post them. I'll come up and take a look. So this was our structure on Friday. So that we already over those stops, we have that, and then the all-time high. Let's just see what we look like today. So here we are. This was that price that was key, the balance area for the higher time frame or intermediate. It was too low, shopping. This was the retail or highest volume price from Friday, too low. This is the yesterday's high, buy stops there for these guys. And next is this, the shorts in here, and then all-time high. And if we can, and whether or not we take it today or not, neither here nor there. Is everybody with me? Hope you're getting something out of this. I still feel a bit out of sorts here being at this computer and not having things working. I'm getting a question. What do I like to teach first for developing traders? Well, I think the first thing to try to understand, and the hardest part of this, is having a trade plan and knowing the pieces in a sequential process that you have to look at in order to get a sense of the condition of the market, and then have trades, and you don't need many of them, at least one trade that you completely understand, and then you develop the discipline to wait for. There's 60 PDFs of the trade, so the trades are not the hard part. I think the harder part of trading is knowing where your trades might show up and why. So coming in today, primarily the trade is longs. I didn't have a short in my plan for today if I was able to trade today. But even on Friday when I looked at this, and I posted over the weekend, or I think I might have been interacting with Kiloton. I don't remember. But somebody, I was sitting in Costa Rica. Actually, I was at the airport in Costa Rica. I was in the chat. Pretty strange. So, but why wouldn't we think longs? Other than it can be shorts, that's not the point. But based on when we came in, how we came in today, what really set us up? Thursday, we took all the longs out. If the longs are out, and then we got an extreme, and the buyers came for it, and they left us this beautiful tail of our wick of excess, and we closed up here. What might happen on Friday? Well, no new longs most likely. And what happens to the weak side? They get taken out. Do you think a lot of longs got thrown under the bus on Friday? Yeah, it's the same thing that happened on this day. We took the longs out. Well, now we have the longs in here. What do we do there? We take the longs out. What's sitting in here? Shorts, shorts, and shorts. What happens to the shorts? They become the buyers. Kind of works that way. And then the other part of it is intraday, it works the same way. So as you go down and as you think of it, time frame rotations, it's still going to rotate over itself and take out the weak side. That's what's happening here. So when you see the market go up and you have stops trailing, well, what's the market going to potentially do? It's going to take them out. Once they're out, and the limits, the other side, the passive side, is absorbing the sell stops, and the market can continue. What's happening over here? It was taking out the stops of the weak longs. That's us. What happens here? Notice where the buyers are. You see the liquidity? They absorb the sell stops. That's what's there. That's your absorption. What does it do? Sets up another leg. And what's on the other side here? Counter trend traders. Thank you. We need them. And they get paid if they know what they're doing. But remember, what's the dominant side? Where do you think we might go? Again, maybe. That's the best you got. So for me and for developing traders, just to answer the question, identify the advancing side, trade from the advancing side only, use the counter rotations to develop trade management processes. Everything needs to be process driven and really formulaic. So, because everything else is random. So it's formulaic. If this, then that. If not, then what? How do you manage this trade? If you got long, let's just say you long from here, right there. Let's just say you long from there. What are you doing now? If you have to, any trader has to say, what should I do? Then they don't have a plan. The market is random. All the answers are in your trade plan. The trades are specifically defined in your trade plan. If a trade is defined, like the IB here, the IB continuation, which may or may not come down here, not the point. You already know that's your next trade versus looking at this going, should I buy this? Should I have sold that? Oh, yeah, there's a sweep. Yeah, well, next time maybe oh, there's a sweep there. Well, yeah, there's a sweep there. Is that a short? Is that a short? Is that a short? What is it? That's why you got to have a trade plan. That's why I created TraderLab, was because most traders are playing video games and they don't even know what they're doing. That's why the failure rate is so abysmally high for retail traders. They run out of time and assets before they really learn the business they're trying to be in. I know how hard it was for me. When I started, I was an anomaly. There weren't off-floor traders. All my friends were down on the floor, and and actually that's where I was headed. And then I found, I got a chart book, and I shared an office with George Lane, who created stochastics, which was an early oscillator. And I started in 1980. Wells Wilder came out with his book on, that you're all familiar with, RSI and, all this kind of stuff. And then eventually we had Bollinger Bands, very exciting. So all of this stuff was developing. So I got very interested in indicators because I thought that was the path. So I spent years working with indicators and then creating my own and building systems based on this stuff. So, but I did think that was it because look how nice an oscillator works. Except once you understand oscillators, you understand they're as random as anything else. None of them have edge. So, we think there's an edge in an indicator when they're just is the only reason. Think about why you have 200 indicators in your software toolbox. Don't you think maybe only two or three, if any of them really worked? They all work randomly. So indicators are fine. The only problem with an indicator is you're going to tweak them, optimize them, and then you're going to try to create more certainty and squeeze risk out, and that means more indicators. And all you're doing is adding more randomness on the input side. That's not a recipe for consistency and sustainability. It's the reason most retail traders don't, in spite of winning trades, don't stay in the business. So if that's your experience, I named a term for myself, and I think it's appropriate. It's Trader Groundhog Day. Work hard, wake up in the same place. That was me. So it might be you too. I lost the chats again. Sorry, guys. See if I can get them back. That's not working. Let's try this. So Greenhorn Bull, but if you don't, as far as order flow goes, order flow I call is the tip of the spear. It's a key element, but it's the alignment. You need to understand where these tools fit. So it's almost like you need to know everything else, and then this is going to help you get down in the microstructure. But all these trades are built on top of a chassis. I call this a chassis. It's a volume profile. All it is a shopping. So once you understand shopping, now you understand trading. Now we have to take that shopping and move it down into shorter time frames because the process of shopping is taking place here. Too high, too low. The retail price or high volume is in there. If I break away from it, now this now is too high because it was too low. And there it is. See? So in a microstructure, I can read this. I also get a sweep here too. And I got a sweep there. Just saying. Now, let's come from the other side. I come down here. I got my sellers. This is too high. Sellers are there. And we're going to zero. But what happens here? I break high. What does that tell me? The buyers are here. Where were the sellers last over here? Well, I believe it was there. Buyers take control. My sellers were there. That's my support. So the microstructure is sellers are there, absorption. Sellers are here. So right here I have sellers, 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 buyers, buyers. Now right here it can go either way. Breaks high. My buyers are now in control. These sellers were absorbed. If I know they're absorbed, I know the buyers are going to be here, potentially here, because they were there. And I can be looking at this to do something with it. Right here were my sellers. My buyers took control. My buyers are there. Support, you see. Now, if I come down here, where were my buyers? They are under here. I'm not telling you how to manage a trade. I'm just showing you how to read the auction. And what happened here? The buyers that were there and there say, oh, really? I can throw 4 more cans of tuna in the cart. Micro volume structure is there. Sellers are here. Break high, trigger, support, and then whatever. Now, these are not trades. This is reading language. So I can read it. Now, when it comes to a location that's vetted and is part of a trade plan, I then can put these together. I can then go, well, if I come down here, which I have no idea, or out here, I can be a buyer. And then I've got to deal with the last place there was a seller, which is here. So if I'm trading rotationally, and let's just say this was my IB. Let's just, for a moment, because this is where you'd be buying the long if you're doing the IB continuation out in here. Where was the last place I had a seller? It was up here. So if I come up here, I want to scale. If I get long down here, where did I have a seller? There. And here. Volume. This is resistance. Sellers are in control in that leg. Buyers are here. So I got sellers there. I got buyers here. If I got sellers here or here, and I'm going a trend up, I need to scale. Or I'm not going to scale. I'm going up here. All this is trade plan specific. I got resting liquidity in the book sitting over here. So I may want to get scaled when I take this out, if I do. All this is trade plan specific. For me, I have no shorts. And again, that's not a recommendation. If you're a developing trader, do you think it makes more sense to be waiting patiently for a trade you can anticipate, or are you going to play a video game and you have to ask yourself? And then because you're P&L oriented, not process oriented, you get 4 ticks and you bail out as soon as you see that. Where the opportunity for sustainability is created by the range and paying for the stops. Does that make sense? Yeah, Kiloton, thanks for posting that. Mean reversion is the basis of how the market works in all time frames. If it returns to any high volume node, it's reversion. So if we think about this micro high volume structure, which is in here, returning to it is mean reversion. Coming back here is reversion. We're coming back to the high volume, which is sitting here. So this is reversion. So if in all time frames, I can go down and come back to the volume, which is the yellow line way below us. That I can come there, that's reversion. And in this structure here, if I break away, I can come back to it from the other side. And that's how I create triggers. Now, it's not a short, but if you have a plan subject to your time frame, and I don't like to use the term, but you're familiar with it. Just so you know, in order flow, it's not time specific, it's behavioral. You'll notice I'm not saying is I got to wait for 5 minutes here or something. I'm saying is I know where my sellers were. And I know if I come back, it's resistance. See where it is? If I know that, does that give me an advantage over other traders that are using indicators or just waiting with their jaw on the desk? For me, I can do something with that if I want. Or if the trend is up, I'm really more involved with taking longs with reversion or against high volume. When this is coming back, this is where the resistance is. But if the trend is up, I anticipate we're going to take it out. If I don't, I can again counter rotate. And then I'm going to come back to other areas where I had buyers and anticipate. Notice this liquidity is sitting where this was. And this was a sweep that failed. This is support. It's at the IB. If I come out here on a rotation, this is a structured long, not a trade recommendation. We may never get there. And why would you say that? Because this is where the buy stops are sitting. So would I want to take a long? I would. Am I willing to take a stop? Gotta. What is a stop? Personal failure? I didn't get it right? Is this a right or wrong business? By the way, where is right and wrong in the business? I mean, what is right or wrong here? Is it a winning trade? Nope. Right or wrong is the plan. If you don't have a plan and you come to market, you're sitting with the gamblers. I always say make sure to get the cocktails and the ticket to the buffet because that's entertainment. The business of trading is coming to the market with a plan, not predicting what's going to happen. The plan guides you. You also have a sense, if you do your preparation, which is not a big deal, to look at what the market did. The market, the ETH low, checked Friday's low, took it out. It was the Acapulco cliff dive, and then we come all the way back inside. What does that tell you? Doesn't that tell you that we already checked an outside? And with the statistics above us, with the high probability in alignment with the trend, with the higher time frame up, might you think that getting long, even if you take a stop trying to get long, that long is where it's at, unless there's a change that you already know and have defined? Wouldn't you know that with a plan? Now you take and deploy your structured trades, which I showed you at the beginning of the stream. You're going to take stops, get over it. What is a stop? Remember, you're protecting your account and you're probing for location. What is right or wrong? Following your plan, taking your trades. Oh, a stop, right or wrong? Nope. Following your plan. That's how you grade yourself. Your plan. You need to know the trades in the condition and the trades that align with the condition. Some days those trades won't align, so they're not qualified, or the range isn't there. It's not qualified, or it doesn't come to the location that you vetted. No trade. That's the business. Not one trade, not gambling. It's all the trades. And those trades are what you prepare for, and you step into the market, and now you can relax because at least you know what you're going to do. And then you're with the rest of us that are in here because we don't know what the market's going to do. Does that make sense? By the way, if you're in YouTube, do you have questions? I'll take a look. Please give a like if you're visiting in YouTube. Yeah, Juve, thanks for posting that. By the way, I'm going to try to show you this. Maybe not. Let's try this again. This is what the TraderLab community looks like. There's a lot going on, a lot of posting, mutual support. You can see a lot of examples of interaction. Statistics, thanks for posting that. And there's a library of webinars I've done. Some of these are up to 4.5 hours long of real-time narration, something like this, but in moving markets. So you can see continuation trades, you can see balance trades where it's two-sided trading, trade management, a lot of different things. When I had long time of streaming, which is a little rough to do real-time streaming for 4 or 5 hours, but I did it. But here's a primer webinar. It's got about 36,000 views or so. Start with that. It talks about anchored inputs. It's all about your inputs, guys. You need to know where your trade is and wait for it. It's like waiting for a bus. You don't just chase, hopefully, buses down the street and you don't even know if it's the right bus. You wait for your bus. Here, meet the TraderLab. Is there a holy grail of trading? Well, no, but how close can you get? Day trading, fantasy versus reality. Stop gambling, start winning. Trading multiple time frames. Why most traders using indicators fail. Are you trapped in trader Groundhog Day? Appropriate for today. Winning the day trading game, and a lot more. Trading gaps and trend day configuration. Trading inside higher time frames. There's a lot. Trading rotations with microstructures. Anticipating trader behavior, the plan. There's a lot in there, and there's a lot more. There's probably 4 years, these things, 5 years, and then document section. So there's a lot in here, plus the TraderLab community. Just want to say, if you're not familiar with TraderLab, you might want to use that link in the bottom of YouTube. There's no cost for it. You don't have to be a Bookmap subscriber. You know, what's interesting about Bookmap, they made an interesting decision as a company many years ago, and I feel very privileged to be part of it, where they decided to invest in trader education. In other words, who is investing in you? Everybody wants you to buy a product. The idea is, of course, Bookmap wants you to use their product, but if you are not a successful trader, then you're not going to be sustainable. If you're not successful, you won't use their high tier order flow product. But if you can learn to be successful, understand the business of trading, develop the solutions, and be in an environment that's professionally oriented, it's not romper room, then maybe you'll become a Bookmap subscriber and a long-term Bookmap subscriber. I've been a Bookmap subscriber, I'm not sure, I think it's about 11 years, I don't know, but it's somewhere in there. And if you understand trading and you create a business, you too may become a career subscriber and owner with a lifetime license to Bookmap. Isn't that something that would be better for you? Certainly good for Bookmap, but who puts you first? I've never seen it happen before, and I think it's pretty amazing, and it's a company you might want to associate yourself with. Please give a like, subscribe to the stream, use the link in the bottom of YouTube. It's available to all of you. Again, there's no cost for it. I appreciate you stopping by. If you're in YouTube, thanks so much for your patience with the problems I had from Costa Rica for the past 2 months. I'm still having some challenges here, but I'm going to work on them. And don't forget to like, and be sure to stop by or visit the TraderLab community. It's real time, and I do interact in there, of course, and so do so many other terrific traders. Doesn't matter how long you've been trading or what you're doing, but if you're experiencing trader Groundhog Day, working hard, waking up with the same outcome, don't feel bad about it. But if you're seeing your shadow today, isn't that how it works? Don't crawl back in the hole. Visit the TraderLab. Apologies for that, but I was trying. Take care, everybody. Have a super day. Look forward to seeing you tomorrow.